How much home bias do you have in your portfolio, and should you do anything about it? Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. So in today's topic, we are taking a look at the topic related to investing, and we are diving into the topic of home bias. For this, let's take a look first at the definition of home bias. So what does home bias actually mean? Home bias is the tendency for investors to overinvest in domestic equities and underinvest in foreign equities. So this means if you are, for instance, located in the United States, if you have a high home bias, your portfolio allocation in stocks, for instance, is maybe too much into US-based companies and not enough in foreign companies. Or for me, for instance, growing up in Switzerland and living now in Taiwan, I most certainly have a home bias towards Swiss and Taiwanese equities. So what does this mean if we take a look, take this a little bit into relations for each individual investor? So this is the market capitalization of listed domestic companies. This is the global, or in other words, this is globally the global market cap of all companies which are publicly traded. And the latest data on this list is from the year 2020. So the list is from the World Bank. And the most recent data are from the year 2020. So it's not really up to date anymore, but more or less we can still use this as a reference where we are going in this discussion of home bias. So you can see in the year 2020, the global market cap of all publicly traded companies was around 94 trillion US dollars. So scrolling down a little bit, we will see what does this mean for the different countries. At that time, USA, the market cap of all publicly traded companies in the USA was 41 trillion. So around 44% of the global market cap. Then you can see other countries here on the list. China, the second biggest market, Japan third, Hong Kong, UK, Canada, India, Saudi Arabia, now also appearing off the list, especially after the IPO of Saudi Aramco, France and Germany. So these are the 10 biggest global markets for publicly traded companies. And you can see each market size, how big is each market. And in comparison to the total global stock market. So for instance, number 10, Germany, the market cap of all companies which are publicly traded in Germany are around 2.5%. So when will you have a home bias? You will have a home bias when the percentage in your portfolio in the domestic market is higher than what you see on this list. So for instance, in the USA, if you are working in the USA or living in the USA, if you are above 44% of all the companies in your portfolio, and especially also the amount that you have invested in all those companies is over 44%, then you have a home bias. If it's lower, then you have even a counter effect, then maybe you have underinvested in your own local country. However, of course, this can change over time. I believe 44% is not up to date anymore. And it peaked recently. I think the US stock market even nearly reached 60% of the global stock market capitalization. But there are studies out there that the home bias is quite severe. Usually in the US, as mentioned, you have seen before that 44% should be invested in US stocks, or up to 60 maybe you can say. But the studies are showing that around people in the USA have around 80% of their stock investments invested into US stocks. Some other countries are not as severe. One country with lower home bias is, for instance, the United Kingdom, where less than 30% of the investments are invested into companies that are listed in the London Stock Exchange. But in other European countries, it's very regular that you, for instance, you see that around 45 to 65%, so half or even more than half of investments into the stock market is going toward the companies that are from your own countries. So the USA is of course by far the biggest, but because it's also the stock market is by far the biggest, so it's naturally that you will have a bigger tendencies here to even have more home bias. So in comparison, if you have, for instance, in Germany, where you only have 2.5% of the global stock market capitalization in Germany, but you are investing more than 50%. The Germans are investing more than 50% of the money into the German companies. This is very highly biased toward the home market. So what should you do against this, or do you need to do something against this, against the home bias in your portfolio? There are pros and cons of having a home bias, and there's certainly reasons why a home bias could also be good. So on the pro side, usually you will have a better understanding of the market and the companies in your home country. It's more difficult to evaluate companies in another country that you're not living in, or even haven't traveled to yet. Then often you also have lower transaction fees. For instance, in my Swiss portfolio, if I want to invest in other countries, I usually have much higher transaction fees when buying and selling stocks. It's also often easier to research the companies in your home market, because there are differences there, of course. For instance, there could be different accounting standards in different markets. Also, legal situation might be different, and you need to understand the legal situation of a specific country. And often there's also a language barrier. For instance, if you cannot speak German or French, you will have much more difficulty to find useful information, especially for smaller companies that are traded in Switzerland, the Swiss companies that are traded in Switzerland. So I put here some examples. Take the viewpoint from a US investor. For you, it's pretty easy probably to evaluate how Walmart is doing, how Kroger is doing. You can just go into the store and take a look how the company is doing, what is their business model and what concept they're using, and are people liking the stores or not. For me, I have never been to a Walmart or a Kroger, so for me it's very difficult to know how exactly is the customer experience when I go and shop to in those companies and those stores. In contrast, for a US company, it might be very difficult to evaluate the customer experience of a Chinese e-commerce company like JD.com, or to evaluate how well is Baidu doing in the search engine market and the online advertising market in China. I have never used Baidu so far, so for me it's also very difficult to evaluate how well is the service really. So the examples are showing there are quite important pros why it might be easier to invest into domestic companies. Then the cons, of course. The most obvious one and the most general reason why you should try to avoid a home bias is because you will have more concentrated risk just to one market. If you're investing globally, you are more diversified and therefore have less risk attached to just one market. Then, of course, there are limited opportunities. Especially if you're living in a country with not many big companies or publicly traded companies, then you have very limited opportunities. But even in big stock market countries like the US, you still have limited opportunities. You limit yourself somehow. Another cons is the market evaluation. Not every country's stock market is has the same evaluation. Sometimes a country stock market's getting the valuation getting pretty lofty, and in other countries maybe the companies there are under evaluated. I would argue potentially, especially the US stock market is a bit over evaluated, and the evaluation of other countries might be a little bit too low, especially compared to the US stock market. So with having a home bias, you might not be able to really fully participate and taking advantage of under-evaluated companies. One example here is, for instance, the car market. If you listen to YouTubers from the US, you often hear them talking about Ford or GM when they talk about cars, when they're not just talking about Tesla sometimes. But there are other alternatives out there. Volkswagen, for instance, or Stellantis, or Toyota, and you never see or hardly ever see any evaluation from those companies, even though they might also operate globally or across many different markets across the globe. So the focus from US people is often on Ford and GM, whereas in Europe people often focus on maybe Huawei, Volkswagen and Stellantis. And there are other opportunities that you might miss out. For instance, like in the luxurious brand, maybe the US companies are not the best in the world. For instance, LVMH might be the global leader there. But if you only have a home bias for the US companies, you might not have the world leader on your radar when you're considering investing into luxury goods companies. Then a common argument that you hear that a home bias actually is not a big issue is because, especially from US people, with US company, I also have international exposure. And is that true? Taking a look at some examples. Yes, that's certainly true. For instance, Apple. With Apple, you have very big international exposure, and Apple is earning its money across the globe, even though maybe the USA is the biggest market for them. And let's take a look at another example is the pharma companies. Again, many times from financial YouTubers in the US, they often talk about maybe Pfizer, J&J, and sometimes Merck, but you seldom hear them talking about other companies, huge market cap companies like Roche, Novartis, or GSK, which are among the leaders in the world. So why people focus on Pfizer and J&J is because they know them from their own stock market. However, if you're taking a look at where do the companies do the business, it's global. So sometimes if you just take a look at Pfizer and J&J, you're probably missing out at even better pharmaceutical companies. I would argue Roche, Novartis and GSK, their market exposure globally is pretty much the same like Pfizer and J&J and so on. They also potentially have the biggest revenues coming from the US market and are also globally present in all the other markets. The same is, for instance, for food and beverage companies. Usually US people only are talking about Coca-Cola or PepsiCo, but they even don't consider maybe Nestle is also maybe the global market leader when it comes to food and beverage products. Then again, when there's, for instance, oil companies, when people are considering an investment in oil companies, US people often consider investing into Exxon or Chevron if they want to have exposure into oil stocks, whereas European people often would invest into BP and Shell. I'm not saying that one or the other is better. I'm not saying which company is better. Sometimes it's better to invest into US companies like Exxon or Chevron. In other times it's better to invest into European companies like BP or Shell. So of course it always depends on the situation, how the different markets are going, how the market dynamics is going, and especially also the evaluation of the companies. Only if you have a home bias in your process of picking stocks, then you're very likely missing out of some opportunities. In the end, I have shown you several reasons why there's also big advantages of having a home bias. And I have to admit, I also have a home bias toward the countries that I'm most familiar with. And I'm even comfortable for having a home bias. But I think for investors, you just need to be aware of the home bias factor. And you can consider then whether or not this is a good approach for you, how you're currently investing, or whether you want to do some adjustments. And then you can take some countermeasures to work against this. This doesn't need to be necessarily investing into individual stocks from other countries, but maybe you could be investing into an emerging market ETF to increase your global exposure, or into other global market ETF to have some counterbalance of your home biased stock pickings. What are your experiences in picking and investing into international companies and into the foreign stock markets? And how heavy is your home bias in your portfolio? Please share your thoughts in the comments below, and I hope we can learn from one another. Thanks a lot for joining me today. I look forward to see you in the next video, and especially I look forward to see you winning financially.